Somebody asked Mike in the break, what is the risks of buying a shelf CC? Now, a shelf CC is a CC that all the accountants and shelf warehouse and people like that, they create CCs, and then if someone needs one in a hurry, then they just sell it to you, and then they change the members. That shelf CC is not trading. So the risk is not there. Okay. So don't be scared of buying a shelf CC. Be very scared of buying an old CC that someone has traded in before. Because that you don't know. If the guy submitted his VAT returns, his PAYE outstanding, remember you got until tomorrow to submit all your PAYE returns. So be very afraid of old businesses because there's chochos there sometimes. Maybe that CC has stood surety for something, and sureties don't die when the CC stops trading, they still stand. So just whoever that was, please, shelf CC is no problem, but old CCs are another issue totally. So these are the things we're going to talk about. Okay. You need to know how many sales it is that you need to make no profit and no loss. Why do I talk about break even? What is so important about break even? Well, it's very simple. At your break even point, you are making no money and you're not losing money. So if you make R1 more, then you're in a profit situation. If you make R1 less, you're in a loss situation. So what happens is on the shows that we go and do for TV and in consulting generally, I get very excited business owners. They say, we have broken even. For the last 3 months, we've broken even. And it is fantastic. And I get pretty excited with them. And then I ask them to show me the figures. And I go through and I look for two things. Two things. Number one, have you paid yourself a market-related salary? Because if you haven't, then you haven't reached break-even. So what is a market-related salary for you? Well, if you don't know, phone a recruitment agency and say to them, if I had to employ someone to do the job that I'm doing, how much would I pay that person on a monthly basis? And it doesn't mean you have to pay that to yourself. It would be nice if you can. But that salary, that market-related salary, needs to be included in your break-even. You need to be paid for what you do, not for what you know. I'm going to say that again. You need to be paid for what you do and not for what you know. So if you are a qualified rocket scientist and you are answering the phone, I will pay you a receptionist salary. As a business owner, you and I know we can take out what we like. But from a break-even calculation point of view, you need to adjust your salary up or down. The gentleman asks, I'm HR, I'm sales, I close the door, I open the door, I make the tea, I make the coffee, I'm the sales director. How do I pay myself? How do I know what's related? Okay? Clearly, that is not what you want to do. Your job is either a IT technician. So that's what you work on, an IT technician salary. But if you do all those things, welcome to the club. We all did that. I'm an advocate. I've stood in a queue to buy 50 Rand revenue stamps, thank you very much, right in the beginning. So we all do that. But as your business grows, you will get to the point where you say, you know what, if I had to work for a boss, I'd be earning 10, 20,000 Rand a month. And that's the salary you put in for members' remuneration or directors' remuneration or however you are operating. Okay, so that's very, very important. The second thing that I often see left out of the break-even calculation is market-related rental. So you're working from home. And in the real world, we pay rent. So when you do the break-even calculation, say, well, you know what? If I had to work from an office, I would be paying 80 Rand a square meter, and I'd need 80 Rand per square meter, and I need 80 square meters. Therefore, I'd need, 6,400 Rand? Something like that, okay, per month. So build that in, and don't tell me you've reached break-even until you've put that in. Because once you've paid your market-related salary and your market-related rentals, then I'm happy to say, okay, now we've broken even, okay? So that's a very, very important issue when it comes to break-even. Now, how do you calculate break-even? Well, those of you that have now worked out how to do gross profit percentage, remember how we did it? 200 Rand sold for 300 Rand is 100, divided by 300 gives me 33%. So if you're selling product and you are on a 33% gross profit, you know that you've got to take the calculation as follows. You take your expenses that you have. I think in page 18 of your handout, there's 30,000 Rand as an example, is your gross, your expenses. So at 30,000 Rand, you divide that into 22%, if that is your gross profit percentage. Now, I'm not going to try and do this mentally at the moment, but at page 18 and page 19 of your handout, you'll see I've got a gross profit percentage of 22% and a 30,000 Rand operating expenditure. You divide the operating expenditure, the 30,000, by your gross profit margin, which is 22%, and you will get 136,000 Rand. Now, you know as a product seller that if your gross profit is 22% and your operating or your fixed expenses are 30,000 Rand, I have to sell 136,000 Rand per month to break even. Does that make sense? If you are not a product seller, in other words, you sell time, you know that your break even is 30,000. Why? Because at 30,000 divided by 100%, that's 30,000. So from a billable hours perspective, you've got to say, well, like we did early on, if I need to make 20,000 in the year, in the month, and I'm charging 1,000 Rand an hour, that's 20 hours I've got to bill. But when you work out your billable rate, please, ladies and gentlemen, don't take your last salary and just divide by 22. Because when your employer employed you, what he did is in your hourly rate, he charged a rental for your desk. He charged the amount of water and lights that you use and your computer. And you know what? There are going to be times where you in the service industry are not going to work. You might not be working 100% of all hours of the day. So please, when you do your billing from an hourly perspective, take into account that you won't be working all the time. Take into account that there are non-billable hours. There's times where you actually have to do admin. You've got to send out invoices. You can't invoice for that. So from a break-even perspective, what I really need you to know as a product seller is what is your gross profit percentage. Very, very important. If you don't know that, you can't work out your break-even.